if you always have a reason, or if you always blame somebody else, or if you always have some reason as to why it did not work out, you're never going to get to the root of the issue. You're never going to solve it.
All right, guys, welcome back to the SimCast. Today, we have a legendary day trader with us today, Nate Michaud of Investors Underground. Thank you so much for being with us, Nate.
You bet. Thanks for having me.
Yeah, thanks, man. We got Sam back with us today. Hey, Sam, how are you?
Evening. Yeah, all good. Thank you. All good.
Good to have you, pal. Well, why don't we get started? A lot to talk about, and I know we don't have you for for too long here, but was really kind of shocked by something that you said in your Sunday scan. And for those of you who don't know, Nate runs a free Sunday scan on YouTube every week. A lot of great nuggets in there. Gives a lot of trading wisdom, mindset advice, things like that, along with what he's watching for the week and things that he's been trading. So be sure to check that out if you are not aware of that. But one thing that kind of stuck out to me last night, I'm watching that, and I hear you say, I've made more on the long side in trading.
Yep.
Is that actually true?
Yeah, I had this conversation with my buddy Helder the other day, and I was just talking to him about, a lot of these guys, even that you've known, a lot of them have disappeared after a while once they get super successful. But the crazy part is you know them as these crazy short sellers, but the reality is most of the money is actually made on the long side. And it took me a long time to kind of figure that out. But thinking big picture, thinking more of a macro kind of mentality, that's where you really can start to let trades work, let your money do the work for you, rather than you always pushing the buttons. So just like an example, I think I gave some on the scan last night, but AEHR, and I sold it way too early. I made it to about 18. But that was from like 650. And then as you can scale into some of those, the trades that are working, and you've got a padding and all of that kind of stuff. I mean, look, when these stocks double, and if they double again, it adds up extremely fast. So looking back and looking at my year and looking, look, if I would have hit the DWAC trade the way that I would have wanted to, or some of these other trades, then absolutely maybe it would be a little bit closer. But yes, for sure, especially this year, and a lot of last year came from the long side.
Yeah, man, I'm thinking like, was it Cabo was a big winner for you, like and then Playboy.
Playboy was one, but I ended up overholding a good portion of it. It was pretty close to being one of the top. But Tiger started a lot of the moves. TIGR, that was from way low to 6 to 20, same kind of move. And then a lot of these other ones that are in the $2, $3, $5 range, where you can get a decent chunk of shares. Once I forget who it was, but I had watched a podcast one time, and somebody had said, a lot of the stocks that double again. Mm-hmm. And so a lot of times when there's news and something's doubled and it's held trend, I start to look at those for a bidder to come in. A lot of the daily charts are all the same, where you've got this huge transitional day, or whatever you want to call it. Lucid is a perfect example. Recently, we had 77 million shares traded hands, and we look at it, we're like, I'd love to short this thing. Great short opportunity intraday, but really, it was all new blood coming in, all new traders coming in. They got to work the traders out. They got to work the shorts in, and then the next move starts to begin. And that's exactly what you saw the last couple of days after it settled. And who knows? You probably see it go $50, $60.
Do you find your confidence like shifting more the more you take these kind of trades and make more money on them?
On the long side?
Yeah.
I have confidence in, like, with E-Trade, for whatever reason, I have confidence taking more size and letting those work. But I'm still a chicken on the long side, with my main trading accounts. Usually that's where I'm more comfortable and aggressive on the short side. Intraday type trades, still, nowhere near the size that I would like to be. But I definitely am more confident getting on the right side of the trade. And really the key is not being afraid to scale in and out around that core, manage that position. So if you've scaled in and it stops doing what you expected, you've got to size back out because you've sized in, you're expecting it to continue. And then obviously if things start to peel back, then your risk is, are you 2x, 3x, 4x your initial position? Things start to go backwards pretty quickly. So that's one thing I've been pretty good at is I'm not afraid to buy higher. I'd rather be buying, I'd rather it be running away from me because that means I'm right. And it's a different mentality than a lot of people have, right? It's so easy to average down, add to a loser and add and add and add. You're going to bring your average down, but it just makes sense to continue to add to a winner. And if it stops winning, size back a little bit.
I'm kind of curious because, you trade a little bit of everything. And it was surprising for me to hear that you actually make more money on the long side. And I don't even know if we should even ask you like what your borrow fees are. I can't even imagine what that would be. I know you shared your ECN fees.
I remember you posting your ECN
I need
fees.
some work on my ECN fees. When I went to Vegas, a couple of the guys that, run the brokers, they're like, you're insane. Just like, but the problem is, just like the other day, what was it? OCGN or it was another trade that I was taking and I'm sitting, it's BKKT. And I was sitting on the bid and I had a block of shares out there to cover. I filled like 1,000 shares out of 20,000 or something like that. And it just swipes up, a buck and a half. And it was a decent trade that I had going on. And I was like, you know what? This is why I pay ECN fees because it just swiped up a buck and a half as I'm trying to be patient to add liquidity. I missed that opportunity. I knew that, I was kind of slowly filling. There was enough size on the offer. I could have swiped, but I was like, no, I'm going to try to add liquidity. And that's why I don't care about paying ECN fees.
So it's really just kind of pennies when you think about like the amount that you're trying to like get out of there.
Yeah, I mean, obviously it adds up because I trade a lot, but when you think about it, was it worth paying that $20 or $50 or whatever it may have been to swipe it versus having, 5, 10, 20 grand of slippage?
Cool. Well, I'm curious, like, Sam and I were talking before you jumped on here, like, what drives you every day to do this? Because when I think about it, like as perspective wise, like if you take your kind of money, right? I mean, you could probably find some nice slow moving, who knows, Visa or MasterCard or something like that, and still be able to make a chunk of change as long as they go up. But you seem to like the excitement. Is that a true statement? Do you like the excitement of day trading? What is it about it that drives you every day to get up and do exactly what you're doing?
Yeah, I think it's, I don't necessarily think it's the excitement, but I think it's, knowing there's a process behind what's going on, knowing that there's a proper setup. There's a high probability that that trade would potentially work out if you have proper risk management. So it's less of the excitement these days. Yeah, you still get that kind of a good feel when you get an A+ type of setup, OCGN type magnitude, riot, mRNA, some type of big trade that's set up and literally everything you've been preparing for and practicing every single day for, all the stars align. Sure. And that's exciting. That's nice. But the faster, obviously, you can reset back to, normal equilibrium, then the better you're going to be. But it's I don't know. I enjoy it. I enjoy seeing, getting the comments and seeing other people, succeed in doing that. I watched the Brandon interview, guys like that where, they didn't really have a pot to piss in, trying to figure it out, blowing up accounts left and right. And, then they get that rhythm, they get that, that consistency. And that's more the excitement for me at this stage. I do like continuing to fine tune and take a more macro approach. Like I've, recently discussed with Chris Kulamagi, which another amazing trader. But just seeing how simple, you can kind of make some of these trades and how difficult a lot of times that I make it is I think more of the passion to try to better myself. And I think that's the main drive finding a better way, fine tuning it,
Yeah.
being more patient with entries, and not worrying about all the other stuff. So many people try. I mean, look, we all try hard, but I think a lot of people try too hard to make P&L, make money versus make a proper trade. And if you're making that proper trade, if you're going through the proper motions, at some point it's going to start to catch on. But the problem is most people start to veer away from that because it's not working at the pace they expected. And obviously that's where, people don't succeed at this.
Yeah. And I think that's a great point. And I'm trying to kind of picture this in my mind because I'm in like year 3, Sam, where are you? 2, 3?
It's coming up to, I just finished my first year.
Yeah. So Nate, if you could have like imagine yourself and I know you're really proficient at this, so it's kind of difficult sometimes, like for Michael Jordan to say like, this is how you want to take a shot.
How you shoot a
These
three.
are the mechanics of a shot, like you're just so good at it. Sometimes it can be difficult to do that. But if you could put yourself in, say, year 1, year 2, year 3 guys that are coming in here and create like a scalable plan, because like you said with Brandon, or even like Kulamagi, I know he was in the IU room, or he's talked about how he started in the IU room and he blew up account after account after account until he found some kind of strategy that kind of worked his way up to like $1 million. And then he shifted gears more towards swing trading, I think. But what would you say is like maybe a best practices for someone in a chat room learning from somebody who's really good? How do you use that? And where do you start? Like, what do you do? Do you find one strategy, systematic or discretionary? Like, where do you start?
Yeah, I think you have to, I think there's a process of figuring out what works with your own personality, right? So, some people like that noise. Some people like the stuff that's jumping around. And for others, it's just too much and it doesn't make sense to them, and they can't kind of process it at the pace that you need to in order to make decisions on the fly. So I think the best way to go about it is if you do join a room, no matter where it is. I mean, there's going to be a lot of tickers flying around, and for whatever reason, when people are new, they feel like they need to trade everything, pull everything up, and get in and do this and do that. But really, it's about looking at the similarities between particular setups. Why was this mentioned? How does it react at particular levels that were noted, and things like that. I think that's probably the best way to really take information. Like, why did it come on this person's radar? Why did it do this? And how did it react at certain levels that were potentially noted? I always try to, as you guys see, try to note, the key levels where that trade may shift, where it's either going to break down and continue to break down, or if it doesn't, there's a good chance that it continues to, head higher. So I think that would be one thing.
Sounds
Two
to
is
me
just
like you're talking about modeling right there. If I can just kind of clarify that first thing, like, are we talking about modeling? Because I come from, when I say modeling, I'm not talking about a runway model here. I'm talking about I come from an education background.
Yeah,
so like a teacher models the correct behavior, and the class kind of like follows like, oh, that's how you do it, and that's how you learn math or, writing or whatever it is. So that kind of, to me, sounds like what you were saying there is when you've got a Nate in your chat room and you've got all that wisdom from a decade plus of trading, like use that to like kind of gather your own intel on these strategies without pushing buttons until you kind of got it figured out what those key levels are, reading the tape, doing the recordings like you talk about. Is that what I'm hearing you say there?
Yeah. And also selfishly, it helps me because, I'm going through verbalizing what it is that I'm looking for. And am I going to do the opposite? Am I going to be trying to, get cute about it and do something different? I shouldn't be, right? So it helps me kind of fine tune, what is it that makes this a good trade? And if I'm verbalizing, putting it out there, that also helps me too. And the same thing with the pre-market, the broadcast and things like that. It forces you to kind of fine tune, what are my main watches? Because there's just so much out there. You're going to miss trades left and right every single day. But the key is really just to take out all that noise and find out what you yourself is best at, not not you as in John, not you as in Sam, not me as in Nate, but okay, they mentioned this. Yeah, that fits what I'm good at. So I'm going to put that on radar, that kind of thing. So I think that, yes, you're right. And going through the motions, be able to watch somebody do that. But I do think that there is a big disconnect with people, just whether it's through marketing or through just social media, all that kind of stuff. They just want to be told what to do. They just want to be like, hey, just tell me what to buy, when to sell, and all that kind of stuff. And that works great in markets where it's great. But, at the end of the day, there's going to be, whether it's 6 months, a year, 2 years down the road, you might have made life decisions based off this working, and then you realize you don't have a strategy at all. So it always comes back to whether or not you do have either a proper model or a proper, process, whatever it is. And like I said, it doesn't matter right now, in 2020 and in 2021, but at some point it will. But that's that. So I do think that it's important to be part of a community, especially like videos like this, and being able to reach out just like you do on Saturdays and things like, I keep on doing this wrong. Why do I keep on getting to the reason, the root of the issue? And we just did the Las Vegas Traders for a Cause. And one of the things I said was, kind of being honest with yourself. There's just so many traders, including myself at times, you find yourself trying to, blame, scapegoat as to why it didn't work out. But I feel like I'm extremely good at not doing that now and fine tuning the why it didn't work or why, that time it didn't pan out. And I think that is probably the most important thing for traders to do when they're trading, because if you always have a reason, or if you always blame somebody else, or if you always have some reason as to why it did not work out, you're never going to get to the root of the issue. You're never going to solve it.
I think that links in really well with a tweet I think you mentioned on Sunday Scan as well, is everyone's posting some huge P&L at the moment, and it's great, it's encouraging to see, but equally it can make you feel a little bit crap. And I think that sort of links in as well with when you're fresh into a chat room, you may have just paid X amount of dollars for it. You instantly want to see that money come back to you. You want to take the trades on, etc. And I was chatting to someone today in the lounge, and I was almost like I don't know if this is generic in general or just IU, but take your time. Like when you go to a new hotel, new town, whatever, have a look around the place, see what's going on, and then find out, hang on, this guy keeps posting trades that comes into my sort of wheelhouse, etc., etc. And before you know it, that's what I found anyway, that after a few months, all of a sudden I was like, hang on, this is actually really making sense quite quickly. I just had to, in the early days, just sit back a little bit. I must admit, I didn't do that. I should have done that. And I'm talking to myself saying, I should have done that. And that's what I would do if I could do it again. But I think that links in quite well.
Yeah, and also understanding like the reason why. Like sometimes, you might have a starter, and then there's this key level that needs to break in order to scale into a trade. And a lot of people, might just see short or long, and they don't really understand the reason why, which I think is a lot of what a lot of people do when they join communities right away. They don't get the full picture.
Well, I think as well, perhaps you kind of hear what you want to hear. And I think we're also in that sort of climate, not just trading, but in general in the world. People want to believe almost people with a similar opinion to them, even though it might be just 1% of the population might have that opinion. And I think that's what's perhaps social media driven as well, is that you can always find someone. You could be like down 50% on your position. You find someone on Twitter who's in it with you, and you're like, oh, he's really bullish, I'm going to keep my position. And before you know it,
I mean, it's always actually been like that too. Even when I first started back 2003, 4, 5 range, that kind of stuff. All Stocks message board, Investors Hub, all these different things. And it was just OTC back then, but you could always find somebody that was long, and always, somebody that's always bullish. Yeah, sure, it's down 80%, but they're still bullish. And it's just the naked MMs, the naked short selling, all this kind of stuff. So there's always an excuse and always somebody bullish if you look hard enough.
That's too funny. Yeah, I mean, so like let's circle back here. Like you got you got to find your personality. Like you got to discover like what's your trading personality is what I've heard you say so far. And like, and two, like observation, like feel free to observe. So like if you're coming into this, you know, as a newbie, there's something to be said for like, just sit still and observe, like find some like, and usually like even the best traders will tell you that the best trades just kind of come to you, right? You don't have to be like going and doing and, oh, I got to be doing this. I got to chase this. I got to follow this, you know, whatever it is. Like sit back and observe and look for those patterns. I mean, it sounds like those are kind of like the two things I'm hearing you say, I guess advice or whatever for how to like use best practices when using these services.
Yeah, I think taking your time is a incredibly important note, just because I feel, you know, a lot of people just want to come in and just kill it. And, you know, and sometimes that leads to oversizing. And just like, you know, Sam had mentioned that same tweet that I was talking about last night, you know, there's a lot of P&Ls flying around here and there, but I think that if you start to, now I lost my train of thought.
Take time.
Oh yeah. If you focus on going through that process during that time, you're also learning how to make decisions, you know, at that level. And if you skip up a couple levels, you know, you're not going to know how you're going to react. You know, sometimes people always think, well, if I just had a bigger account, I'd be fine. But if you have a bigger account, you're trading more size, your losses are going to be larger. So as you progress and as you're learning, I think that it's important to also understand you're learning as you go. And as you start to scale up, you're learning the emotional attachment that comes to names, you know, all that kind of stuff that, you know, you have to develop as you go. And what used to freak me out may just be a rounding error now, right? So, and I think that's with all levels, right? So when you first started, maybe it was $100 and you're like, oh my gosh, I can't do this. Now it might be 500. Now it's $5,000, whatever the case may be. But you have to desensitize yourself essentially from that. And I would not underestimate that process, because a lot of people try to cheat and, you know, jump up, and it's fine. It works until it doesn't.
It works until you get PPSI or DRAC or PHUN or whatever it is.
Exactly. You have the perfect risk management goals. You got them all written down on your monitor, and when it happens, none of that matters.
Yeah.
If you screw it up.
Well, we're all human. We're all going to make mistakes. So I'm curious, is pain a prerequisite for that consistency that you're talking about?
Like going through the motion and getting squeezed or getting
yeah, because you talk about being desensitized, and I can't tell you how many times I'm like, John, like you can do this, you can do this. Come on, man. You know, it's like, is this a real threat or is this my anxiety? You know, what's going on here? Like, do you just really need pain in order to kind of like, you know what, I've experienced this. I think you
have to be there. I think you have to have been there to know you don't want to go back. Right. So I think it's important. And also, I think it gives you the confidence knowing that you can come back. Right. So you've been there before and you've built yourself back up. So you know you don't want to go there, and you know that you can continue to build back. One of the odd things is a lot of times when you're maybe down a lot, you start to you get more aggressive, you make the best trades, you know, right when you're like you get yourself out of a hole, right? And you're like, man, why can't I just do that every single day? You have to kind of figure out what is it that just triggered that gave you the confidence to be able to make that trade, because you just made one of your best trades ever. Yeah, maybe it was reckless. Maybe you were, you know, down a lot and you ended up green on the day. But what is it that was triggered, you know, right there? And yeah, I think it's very important to focus on that desensitization, and it does take time, and you just have to go through the motions, and slowly but surely you will skip up to different levels, and there will be that sizing opportunity that, like I talked about in the scan last night, OCGN for, you know, maybe a lot of people. Maybe you're slowly going and then you take a jump up, and now your average, you know, maybe intraday swings are a little bit more, and then next one comes along, and so on and so forth.
And how much of that is actually being in tune with the market? Because like you're saying, you may have that big day, that big green day, that sort of thing, but if the market's not giving it to you, like how do you gauge that? You got to be in there every single day, because I've watched you enough to know, like, it's hard to get away from those screens, because when you get, it's almost like when you get away from them, you lose that touch, that feel.
Yeah, and I 100% agree. I think you need to, if you miss a day, I think you should still review charts just to kind of understand, what's moving. From a macro perspective, for example, if you look at, Tesla allowing Lucid and all these other names to start going crazy, without that double, $600, $700 to 1,200, whatever it was, without that happening, would we be having all this crazy EV space moves and names going? Probably not. So understanding what the market likes right now from a macro perspective also helps. PPSI today, maybe nobody would have cared about that, a month ago. But EV right now, hot. Automatic buy, automatic, crazy volume, whatever, respect the trend. So I think that's one of the examples that I used was with Helder, my buddy, and with COVID shut down his kind of business for a little while. Just the ability that he was able to be at the computer and get a feel for what's going on, understanding what the market's allowing right now and what they're not. There's some days that, it's okay to chase a stock, that you normally wouldn't. And then there's other markets where, there's a better chance it's going to stuff and to completely unwind all day. Right now, we don't really have this. And, you have to be aware of that, because there's just so many traders and so much volume, so much demand. That's what's happening is that shorts are coming in, they're fading, and as soon as they stop fading, the cover comes into the close, and then the move is delayed. That's the current market that we're in. The next day, when you don't care about it, the move is happening. So understanding that we're in that kind of market, understanding right now that we're in like a complete meltdown. So if you're jumping in front of stuff, then you're gonna get run over.
Yeah, I just said to one of my buddies, actually, he said, "How did today go?" And I said, I'm glad to be alive." It sort of felt like one of those types of days, really, when everything just went that few bucks further than you expected. But luckily, I took the warnings well. I didn't jump in front of anything.
Yeah, it's one of the biggest things that I think that I've changed is just that ability to have the patience and not really worry about missing that trade. I've taken, step back off of open. I think that really helps, because, so often you want to be in a trade, you're prepared, you're ready to go, and then you do it, and you end up having blinders on all day.
No, you got to have that flexibility, definitely, especially just to kind of move with the market, and be fluid with it and keep a pulse on it too. So that's awesome, man. So yeah, just having that, discovering your personality, giving yourself time, and really like being flexible with the market and not being so rigid. What do you think is going on these days? And we discussed this in two previous interviews, and I'd love to get your take on like this whole gamer mentality and the whole chat room versus chat room thing that's going on. Like, are you in any other chat room? Do you keep a check on things, or are you just like watching volume and price when you trade?
For making decisions, I've found it better for me to just watch price. I used to be in different rooms, and I think I had mentioned Kodak. I got some serious conviction based on the fact that I in my eyes, it was just a newsletter going in and out, and as soon as they were going to be done, that was it, and I was going to get my cover, and so on and so forth. Yeah, that did not happen. But from that point forward, I just kind of was like, what, it's not worth it. And I'm not personally in any rooms. I'm not like watching throughout the day. I watch certain feeds and things like that to kind of get an idea of when things might start to get retail crowded. But there is definitely a lot of people that I'm surrounded with that are focused on that kind of stuff. So personally, I'm not in there, but I do have an ear out there for pretty much what's going on. But it definitely plays into what's going on these days.
Yeah, how's that changed the dynamic of trading since you got started?
You have to be careful of how not necessarily aggressive you are, but you can't just lay out, exactly what you're looking at, because then you become a target, right? So
Okay.
there's a lot of like, let's put shorts out of business type of you know discussions out there. It's just ever since AMC and GameStop and all this kind of stuff, everybody it's at war with the shorts. And
Yeah.
I mean, it's easy to blame shorts. It's easy to, it only went down because of them. But we all know that that's not the reality, that it wouldn't have been $2 or $3 or $4 higher if it was not promoted. And at some point when the exit comes in, they're going to pull back regardless. I'm personally just taking advantage of that move at times. But again, it goes back to that scapegoat conversation. It's easy to say, "Hey, this guy," or "Hey,
Yeah.
those people,"
Yeah.
and pass the blame. All of a sudden, it's not you that caused them to lose all that money. It's this guy over here.
Yeah, I'm just thinking about CXDC, because that wouldn't have delisted if it wasn't for the shorts ride. That's how it
Exactly.
works, right? Yeah.
But those are the types of things. I mean, look, I don't hate anybody. I think it's a great opportunity for, I mean, the opportunities that we've been given because of this is countless. I mean, it's insane opportunities. I just don't like the repetitive recklessness at the highs, because I think that you and I both know when you're new, you just want to be told what to buy. You just want to be told what to do. And you also have that FOMO. So, you see the stock go from, say, 50 to 60 to 70 to $1, $1.20. You're like, I got to get in. Then you're buying at 150 because you think it's going to 3 because shorts are going to get squeezed and this and that. And all of a sudden it's 50 cents and you just blew your account. And that didn't have to happen. It was just because of a reckless, tweet or a reckless comment, things like that.
That kind of sounds a bit like me, actually. When not in the UK at least, I sort of, followed some tweets that I perhaps shouldn't have, and then you end up, unfortunately, being left holding the bag whilst your friends.
That's the average trader. Yeah. That is the average trader. You can hold on. Oh, the alert was here and this and that, but the average trader is not in there. The average trader, just even like my uncle, he every time there's a stock that's up a lot, he's like, should I buy? Should I buy? And I'm like, man, this thing's up a lot. Maybe I should short it. But the mentality is like, I'm afraid to miss, the move. And so when it's going and it's going higher and it's going higher, people just are like, well, I need to buy now before it goes higher and I miss it. And that is the average buyer. And that's why these moves have such aggressive moves, is because the average buyer did not buy in at the bottom. The average buyer is still buying.
I suppose just linked to that as well, like often people think that IU or short chat rooms target some of these retail heavy plays, which obviously couldn't be further from the truth, but perhaps just touch on why some of these retail heavy trades actually do provide such good short opportunities.
I think it's more of like a kicking the can down the road kind of process, right? Where it's like every single dip is bought and it's held on and held on and held on and held on and held on, and nobody's selling. And then at some point, it finally cracks and they're still not selling. But if it does not get back over that level, then there goes through the process, the denial, and then all right, fine, I need to get out, and it has that secondary unwind. That's why you see such huge unwinds on these retail heavy names, is because there is just that process. It's, you've got this huge breakout, pulls back, holds support for many, many, many times. Maybe he does a late day move and gives them a little bit of false hope. And then it's just that process, denial, 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 denial. And then, you get smoked and then you bail. And then it has that big unwind, just like OCGN or things like that.
Well, it sounds like that, there's a bit of kind of a catch-22 then, like all of this retail excitement that's going on and this influx of traders that's come into the industry is a good thing in a lot of ways. Obviously, it gives exposure to trading, and perhaps a lot of those traders who have kind of caught the bug of like, hey, even if they rode some of these names back down, and made less than what they would have made, they're like, I'm wondering if I could actually figure out how this actually works. So on one side, it's a little bit of toxicity, and then on the other side, it's like, it's giving exposure to the industry for, I don't want to say more responsible, maybe that is the word to use, like a more responsible approach, like you were talking about earlier, like process, because you seem to be looking out for the guys in your room, like, whether it's a mother hen, thinking like, hey guys, watch these levels, you don't, be careful here, don't blow up, whatever it is. Do you think that's a good thing for the industry?
I think if you want to have a long-term career, there's definitely going to be a lot of people that are going to make more money than me, more money than you, more money than everybody combined right now in this current environment. But like I was saying before, then you start to make these life decisions based off of this, understanding that you know how to trade. And at some point, this will shift. I mean, I don't know. Maybe it's another 2 years, 5 years, 10 years. Maybe this is the new way. I don't know. I hope it never stops. But it's just it comes down to understanding what is it that makes a good trade. And I think the people that genuinely want to learn how to trade get that, they understand that, and they appreciate that. So the other ones that are just kind of doing it as a hobby and it happened to work out, it's still going to be a hobby later on. The ones that want to make a legitimate career out of it, I think
understand
the value and the importance of having just that process behind what's going on.
Cool. What, on that point, what do you think are, what maybe just the top 2 or top 3 mistakes that you see aspiring traders make?
I think probably just trading to trade is a big one. A lot of people just force a trade almost. Like they just want to be in a trade, and it's like, relax. Just wait, be patient. I think not understanding the importance of risk management. I mean, the only reason people aren't here is because they blew up, right? And how do you prevent that? And capital preservation is obviously the most important thing. Maybe it doesn't happen at the pace you want, but there's nothing worse than going backwards. There's nothing worse than losing a ton of money. So having some type of system in place to prevent that, I think, is important for new traders, because that's really the difference between successful traders and not, the ones that know and can lose well. That held me back for a long time, because 99% of the time I make good decisions. But at the end of the day, I'm a super stubborn trader.
Can we dig into that real quick?
Yeah, well, that was kind of the point, and I'm a lot better.
Tell us about that time, Laura. What did she say to you? I remember you telling me this one time.
Oh,
hey, you just like cut your she was like, you just cut it off at like 2,000 or something like that. I can't remember. Like what was going on back then when you learned risk management?
Well, you learn that you don't have proper risk management, right? Like I had it. I would have told you I had risk management, but then you learn that you don't, and you end up in a situation like even like PTPI today. I'm sure a lot of people did not expect that. Did not. Oh, I'll wait till the next dip, and then it never returns. It never comes back. So I think that moment, it was just she basically was like, put on a post-it. This was, I don't know how many years ago, but like 2,000 max loss. Like there's no reason for me to lose more than $2,000 in a particular day on a at that current level that I was at. And she was right at the time, because I'm going to try to make back this loss. And what happens is, after you have a loss, nothing's good enough, right? You lose X and you make back 25%. It's not enough. And so you go to try to get a little bit more, you end up either flat or back, red on the days, something like that. So just knowing what risk makes sense for yourself at that current time, whether it's your count size, your current situation, whatever that is, you should have that number and know what it is that, because it doesn't matter if you're right or wrong on the trade, there's got to be a point where you cut it off. And I think that was the most important. And then I just did a presentation in Vegas on, the exact same thing, where I literally put in a hard stop in my account. And, after that, it went to 20K and then 50K and 100 and 200. And the point is not that, like, it's rarely ever an issue, but that day that it's an issue, I don't want to be making that decision, because I know that I'm going to probably be stubborn, and I know that I'm probably going to, that's not good risk management, but I know that about myself, that 99% of the time I make the right decision, but that 1% is the one that, is going to be those outlier losses, those Kodaks and situations, the AMC type moves. AMC was pretty much controlled by me. But the Kodak situation, I mean, I could have had 5 more trade opportunities had I had my max stop, say at 200 grand that day. So I know what I'm not good at, and therefore I restrict it.
Yeah, I'm finding that too as well. I'm typically setting hard stops at certain points now, which I know obviously my thesis is completely debunked, and
Yep.
It just takes that emotional connection out of it, and I just know, oh, it's done. And I don't worry about the slippage so much then, because it's only going to be a few cents or whatever, because I know that if I was manually doing it, because it could jump 10 cents past, and then I'd be thinking, crap, what do I do? Or 20 cents, 30 cents. And then you're in this like new black hole, and then you're thinking, what the bloody hell do I do? Well,
you freeze up, you try to figure it out on the fly, and you're not in sound mind at that point.
Yeah, exactly.
So, and you start to make emotional decisions. At the end of the day, it should be systematic. It should be no emotions involved. This was the plan. And I think a lot of people, getting back to your question, John, too, about new trader mistakes and stuff, maybe they get upset about losing money, right? But they should be actually happy that they made the right decision. They should be like, Sam stopped out properly. Like, he shouldn't be upset at that. He should be happy that he went through with his plan. The trade did not work. Not every trade's going to work out. So the fact that you stop at a certain level, that's a good trade.
Yeah, that's such a great point. I mean, especially that last point there, like not having a trade plan as a newbie, like too often you're just, like you said, you're just trading to trade. And yeah, and that's, well, that's a really good point. So we're just about out of time, Nate, and I really appreciate it. Well, I wanted to kind of touch on one thing that you're always trying to hit home, and you talked about that in your Sunday scan, and that's recording your screens.
Yep.
So what is it about, obviously, at Tradingsim, we're big about replay, and we think that that's like one of the best paths to actually learning. Why do you think that is? And you said you record your screen every single day still.
Yeah, I do. At some point, maybe one day, I'll be able to. I've talked to the guy that does my Sunday scans, and I'm like, if I give you this whole file of all my trades, can you pull it out, different setups and things like that? But I think you just need to like start at day one and then start to file them away. But I think the important part about recording screens is days like today, where you have certain levels that are soaking that maybe should have broken down. You can go back and kind of see, oh yeah, that was the level. Or if there's a move that stuffs into a current level, meaning it goes up to a prior level of resistance and it just hits a wall, a bunch of volume, hits, and then it ends up pulling back. You can go back and review that. They're not always going to be the same. They're always going to be different. They're always going to be just a little bit, different. And the more that you see, the more well-rounded you can kind of prepare. That should have stuffed there. That should have died. It didn't. Something's different today. And then those are the ones that, a lot of times you have that next secondary squeeze. So I think that's super important. And you can always ask, what did you see there? I mean, that's probably the most popular question. Like, how did you know? What did you see there? What did you do? But there's nothing better than actually being able to see it in real time as it plays out, and as things kind of progress throughout the day.
And to be able to go back and then kind of review that, because I know one of your Traders for a Cause events, you talked about the importance of categorization.
Yes.
And so is that kind of what I'm hearing you say there? You wish you could send it to your YouTube guy and like, okay, let's put this into a category. Let's put this one into a category. Like, and it's maybe similar to like guys who take screenshots and put it in a OneNote and annotate them.
Yeah, I think that's it. It's definitely important, because then you can go also, with that note, you can go back and see how that might have played out in a prior day. You know, you can go back, and a lot of times you'll see that they actually do very similar moves. Not always, but you know, a lot of times you'll see that typically this has huge volume pre-market. It puts in the peak by 9:45 a.m. and it fades the rest of the day. You know, the day that it does not and it starts to make highs by 11 a.m., maybe that's the day that it squeezes. So I think that there's a lot of information that you can go back by rewatching it. And I think it's the best way to learn tape because, you know, I'm not 100% purely based off of tape, but I think that it plays into a lot of the decisions that I make throughout the day for sure.
Well, that's definitely made a huge impact in my learning process is, yeah, especially when I watch that categorization chat that you get, or that talk that you gave, because it does really, Kulamagi actually talked about this in a blog post that he wrote recently about how he studies his episodic pivots or whatever he calls them, you know, the gap ups, and how he went back like 3 years, 5 years of data and just studied them all. And it's a similar concept, right? You're putting these recordings and these screenshots into, you know, whether it's a file or a bin, but it's, you know, you should be like filing that away into your head as well, so that you know when you come to the market every day what to expect on this, because you've seen it before.
Correct. And that's actually the reason why I want to file them away. If I ever did something where you could kind of click, you know, failed follow through momentum. Okay, what's that look like? And then maybe there's 20 different examples of it. They all might look a little bit different, but they're the same general idea, same general concept that it ramped up, it failed, it tried again, it failed at a lower level, and now it's starting to unwind.
That's great. Great stuff, man. Well, Sam, you had one last question, wasn't it? Like, what are the 3 characteristics every trader?
Yeah. So one of my favorite podcasts is called the High Performance Podcast, and it's like it's a British podcast. But one of the questions they always ask: what are 3 non-negotiable behaviors or characteristics that traders must possess to be successful?
I mean, the ability to lose, you know, and be okay with it. Separation of emotions, I think, is super important. And let's see. I think drive, like, you know, the passion to look, you can't master trading, but you can excel at it. You can get better. You can fine tune it. You can better it. And I think the fact that you can't master it, but you can only, you know, keep on practicing to get better and better. I think there's something about that. And you know, I think those are probably the main 3. But being able to fine tune that emotional, you know, and not, you know, like one of the first questions John asked, like, you know, you still get excited about this kind of stuff, but you know, the best couple traders that I talk to, you know, yes, it's nice to have a good win and stuff like that, but it should be expected. And I think Greg said that as well. You know, it's business as usual. It should be expected that you just crush that trade because you traded your process. That's your process. You know that it works. So that is a result of, you know, your preparation. And I think it's kind of a buzzkill for some, you know, but the faster you can get back to equilibrium, the faster you're back to business, and you don't let all that emotional kind of excitement get to you, the back to business you have.
That's a good answer, and it's perfect, because I had quite a nice trade with OCGN, and actually what I loved about it was actually how my chart looked after, as opposed to the P&L. I won't go as far as to say it brought a tear to my eye, but I actually looked at it and thought, I thought, like, this is something that, like, I'm proud of. This process I'm proud of.
Yeah.
So I completely, I think that's a really
Sam,
good answer.
why haven't you printed that out and put it behind you on that Land,
I should.
Land Rover there?
You got a spot for it.
Yeah,
bottom right.
Good stuff, man. Well, listen, hey, thanks so much for being here, Nate. And before we go, tell everybody how that the viewers can find you.
InvestorsUnderground.com or Twitter Investors Live.
Twitter Investors Live, and we've got your Twitter handle there next to your video feed on the recording. So, thanks so much for taking time, pal. We really appreciate it.
Appreciate it. Thanks, guys.
Thank you.